Good morning, everyone. I'm Julien Menegalli, and you're listening to Banking Insider, a podcast boosted by Indosuez Wealth Management, broadcast on paperjam.lu and Delano.lu. Banking Insider tells everything you need to know about investment, and today we talk about structured products, what they are, and why they are relevant in an investment strategy. I'm pleased to welcome Aurélien, Leroy, and Assa, Okoroafor, respectively in charge of structured product activities and asset derivative sales structurer at Indosuez. Good morning, thanks to be here today.
Good morning.
Good morning.
To make things clear for our audience, let's start with a definition of our subject. What is a structured product, Assa?
Yeah, sure. A structured product generally consists of at least two financial assets: a zero coupon bonds component and a derivative component that will generate performance. Each structured product is defined by a formula whose characteristics are fixed and known at launch.
All right, but how different are they from traditional assets?
Structured products are among the investment vehicles that can be used to diversify a portfolio. They offer attractive complementary alternatives to traditional investments, and they provide access to all markets: equities, bonds, commodities.
All right, thank you, Assa. We generally draw a distinction between three families of structured products. Can you say more about that, Aurélien?
Yes, indeed. So usually we split the structured product into three families. The first one, the best known family, is a yield enhancement product, which can be compared to bonds.
Yep.
During the life of the product, it will pay a coupon under certain conditions. The second one is the family that we call participation, which provide exposure to the positive or negative performance of an underlying. For example, if an investor wants to receive only the positive performance of an index, he can buy a participation product which will perfectly suit his needs. The last one, which we call an hybrid family, includes products that don't fit in the other two families.
Some kind of a mix, right?
Yes, indeed. So it can be a mix of both, where we will have participation and yield as well. But this family is clearly a bespoke, tailor-made product to answer to the need of the client.
Thanks a lot for this explanation. To approach our subject in a more recreational way, I would like to play with you with misconception and beliefs about a structured product. Let's start with you, Assa. Misconception number one: structured product could be more complex and dedicated to professionals only. Is it right or wrong?
It's true that some structured products may appear complex at the beginning, but the way that they work is known in advance based on the performance of the underlyings, so investor, whatever the profile, subscribe with full knowledge of the payoff.
All right. Aurélien, misconception number two: structured products are riskier and maybe more hazardous than traditional asset. Is it right or wrong? Maybe both?
I will say wrong. Regarding the risk, for sure they are not riskier than traditional assets. For example, if an investor buys a structured product for €100, he knows his loss won't be above his initial investment, which is exactly the same for bonds and stock. For sure, in a structured product, we still have the same type of risk, which is credit risk, variation risk, and market risk.
Yeah.
Regarding the hazardous factor, we can say that it is more hazardous because the structured products are linked to traditional asset. For sure, during the life of the product, it can be difficult for investors to understand the valuation of the product, but they can easily calculate the performance at the maturity of the product.
All right, thanks for your explanation. Last one for you, Assa. Misconception number three: structured products are illiquid and very expensive assets. Is it right or wrong?
It's wrong. Structured product can be sold at any time. Issuers are required to display an exit price under normal market conditions. Regarding fees, MiFID regulation require distributors of structured products to disclose their fees, so structured product fees are transparent for the investor.
All right, thanks for your explanation. Let's go back to more formal question right now, particularly on the services Indosuez provides to its customers. What kind of solution do you provide? What kind of specificity? And for what kind of advantages, Aurélien?
At Indosuez, we offer two options for assessing the structured product market. The first one is the discretionary mandate we have. We have a dedicated team of 4 people. which subscribe to structured product at their own discretion in order to manage the risk profile and the needs of each client. The advantage to have a dedicated team is they can quickly size opportunities and execute arbitrage operation when they find some. The second offer we have at Indosuez is a traditional advisory team where clients are guided by a specialist, market specialist. We propose a structured product, always in adequation with their risk profile and their needs, but the decision to invest or not will rest at the client end.
Yeah, for sure. Regarding to what Aurélien said, Assa, how different is your service compared to what other bank could provide?
Our differentiating factor is that very few competitors in the place offer 100% dedicated discretionary management in structured product.
Aurélien, Assa, thanks a lot for your clear and inspiring explanation. Dear auditor, we see you soon for a new episode of the podcast Banking Insider, dedicated to wealth planning and linked with philanthropy. A series of podcasts available on pepperjam.lu, Delano.lu, and all your favorite streaming platforms. Have a nice one, everyone. This podcast is for general information purposes only and do not constitute an investment recommendation. Before making any decision, is it your responsibility to ensure that the product or service corresponds to your personal and financial situation. Any investment decision involves risks, including loss of capital. Seek advices from professionals.